A very good morning, ladies and gentlemen, and thank you so much for joining us for this morning's virtual event. This particular webinar focused on responsible investing, where we are going to bring you some exciting and cutting-edge research to share and certainly debate with you. My name is Gugulethu Mfupi, and I look forward to being your host here this morning. Now, joining us today, we have a panel of experts who are thought leaders and certainly know quite a bit regarding responsible investing. It certainly does build up on a theme focused on ESG. Environment, social, as well as governance, which we know is no longer just a phrase that has seen a lot of excitement within the investment community, but one that really speaks to the ethos and the understanding that institutional investors are undertaking to ensure that they go beyond just looking at the financial metrics of companies, but really ensuring that there is an impact that they're making in the societies within which they serve. Well, we're looking forward to some of your feedback, and we'll be debating some of these elements with you throughout the course of today. And as I highlighted, we're doing this with you. And this is an active call for you to participate with us in conversation today. So please be mindful and, of course, posting your questions along with any themes or thoughts and insight that you'd like further details on within the Q&A section of our particular platform this morning. Of course, after the panel, we also have an opportunity to engage in some of these questions, and we do ask that you do make reference to the person or the speaker that you'd like to address the question that you have. One thing that I am quite cognizant of is that as members of the media, we're always looking to break some news, find that scoop, and of course, share unique insight with the audiences that we serve. And we will offer you this opportunity to speak to a Momentum Investments representative, and you can certainly do that by contacting Yanni Ruet from MSL, and she'll be able to arrange these one-on-one conversations with you. Fundamental to our conversation here today is that we also want to make sure that you share the message that we share here this afternoon or morning with members of the public. And you can also do that by making use of social media platforms. Now, we are on a number of platforms, primarily LinkedIn and, of course, Twitter. And you can find us by searching the name Momentum Investments on LinkedIn and on Twitter at Momentum INV_ZA. At Momentum INV_ZA. And you will be sure to be able to share some of the feedback that we have on social media, and of course making use of these fundamental hashtags that we certainly want you to incorporate. Hashtag investments, hashtag responsible investing, and hashtag advice for success. Well, we're quite excited to hear from many of you here today, and of course look forward to the engagement that we'll undertake. But I guess it's also important for us to really lay a sense of the landscape with the three speakers who will be engaging us on this very critical topic. Allow me to introduce our first speaker for today as we really get a firmer understanding of the role that responsible investing plays within the South African environment, and primarily what Momentum Investments' approach to this actually is. Our first speaker for today is Sonja Saunderson. She is the Chief Investment Officer of Momentum Investments. Sonja is responsible for ensuring the outcome-based investment philosophy is ingrained and represented in all portfolios. Sonja has extensive experience in constructing goal-based outcomes for clients, as well as portfolio construction, risk management, investment management, selection, and portfolio management in general. Sonja, we're going to start by introducing you today. So thank you so much for your time, firstly, and really looking forward to some of the insight that you'll be able to share with us.
Thanks, Gugu.
Indeed. I guess first things first, there's certainly a lot of hype around responsible investments, right? And we need to be quite cognizant of not just following the hype, but really understanding the merits that are ingrained in participating in ESG, as well as placing that in a greater focus when it comes to investment philosophies and the construction of portfolios. I guess to set the theme for us, Sonja, perhaps if you can enlighten us if there are merits to this approach when it comes to investment opportunities in the market.
Yes, indeed. Thank you, Gugu. Definitely, this is a much talked about topic locally as well as globally. It's certainly something that if you go to any asset manager conference, any perceived approach in the industry, everyone is talking about responsible investing. Everyone has launched some sort of a product about it. Data providers are coming to the fore. There's a lot more analytics and a lot more things that you can rely on from a responsible investing perspective. So it really is the place to be. It's the much talked about topic right now in the industry. I think it's important that we first of all just take stock. What is it for us, right? What does responsible investing mean? And for us at Momentum Investments in particular. So I think it's important that we share that for us really responsible investing is going beyond just the traditional means of financial gains and financial returns. And that you're really thinking beyond that about what the impact is that you're lasting and that you're giving in terms of the society and the environment as well. So from that perspective, it's something that really aligns good intent and good practice and purpose with an outcome and an experience that an investor will get at the end of the day. So it's something that's near and dear to our hearts, as I'm sure you'll find out this morning as well. But let's also be honest and say where there's a lot of hype and a lot of focus, there's also a lot of skeptics, right? There's always a lot of skeptics. So you do get a lot of people out there that says, why do we care? You know, it's just motherhood and apple pie. It's not something that we need to spend a lot of time on, or in fact, that we've done a lot of this already. So what is the point about all of this? And then you obviously also get the people that give it a bad rap, let's be honest about it. So if I think about greenwashing, I'm not sure if you've heard the term before, but really where people like to dish up things in a particular way. So it sounds good, you know, you want to be part of that.
Window dressing, yes.
Exactly, that window dressing. You want to be part of that, that popular trend of being able to say, well, I am also a part of the responsible investing movement. And so you do get, unfortunately, a lot of proponents out there that are also dishing themselves up. But if you look behind the scene, you look behind the curtain, it's really just traditional investments for financial gains and nothing more than that. So I think that's also something to be on the lookout for. And of course, if that then happens, it causes a lot of people to ask, well, is this just another bubble? You know, is this just another something that's going to blow away and just another fad and something that doesn't really belong in investments for the long term?
And that raises a very valid point, right, Sonja? Because we've seen a bubble before with the tech bubble that we saw in the early 2000s. And of course, there's a lot of concern about cryptocurrencies in particular and Bitcoin, given the volatility that we've seen in the price.
That's right.
Could that be another potential bubble?
That one is a difficult one to answer, because we were trained as investment professionals to really think about the demand and supply of something, to understand the fundamental nature of what will drive its price over time before incorporating it into investment strategies and into portfolios. So for me, it's difficult to say that I will ever put a lot of money into cryptocurrencies or something like a Bitcoin, because it's just such a funny animal that
no underlying asset.
If Elon Musk tweets on a particular day, you know, the price goes haywire. So it's something that's very sentiment driven, and it's very difficult to know where it will go. But the fact that cryptocurrencies and blockchain technologies and things are yet to stay, I mean, that's a given. That we know is going to happen. Maybe some of my esteemed colleagues have a different view on cryptocurrencies, but I won't put a lot of money in cryptocurrencies myself.
I mean, the reality is we don't know whether it's a bubble or not. Time will tell. I've got an opinion, and my opinion leans towards it's a bubble. The technology and the IP behind cryptocurrency is fundamentally solid, and we've seen a lot more central banks starting to investigate whether their currencies themselves should have a cryptocurrency skeleton. Personally, I believe that's the future, but an investment where Elon Musk tweets and there's massive volatility in the price, and where most of the data mining happens in China, and China's really changing their perspective of how they want to look at their society in terms of technology. I mean, should an investor invest there? It's a very personal question, but from an investment management perspective, my mantra is diversification. You never bet the house. So if you think it's a key to the future, think about it. Personally, I don't do it with my own money. I'm leaning towards the side of bubbles, but time will tell.
Oh, interesting dynamics, eh? Yet we're seeing what's happening in El Salvador, where it's actually going to be used as a legal tender in that particular market. So certainly lots of arguments that can go around in terms of cryptocurrencies. But I guess, Sonja, to stick with you and, of course, understand the merits of responsible investing. Cryptocurrencies, as Mike has mentioned, leaning towards a bubble, still uncertain about where it exists. And that really brings us to the theme of exclusions, where when we take a look at the priorities of ESG investing, that does actually speak to exclusions that need to be prioritized. How is Momentum Investments approaching this?
Yeah, so we don't really believe in investing on an exclusionary basis, although if you think about the history of responsible investing, where it came about, then certainly there are practices, and also practices here in South Africa, that from a religious perspective tells us that an exclusionary way of investing does have a place. There are people that like to invest that way. For me personally, it is something that is a bit of a risk because we already have a concentrated small market. So if you start excluding too much, you can very often create a concentrated bet on a particular area or sector or something that will create a lot of volatility in your investment. So it's not ideal from a pure investment perspective. And then, of course, in South Africa, we're sitting with the paradox of, if you look at something from one perspective, it's so obvious what you should do. So let's take our coal-based economy and the fact that if you invest in Eskom from a coal-based economy perspective, if you think about it just with your E hat on, your environmental hat on, no, you shouldn't invest in something like that, right? It just doesn't make sense because it's not sustainable. We know it's not good for the environment. But if you think about it from a social perspective, I mean, how many households are fed by Eskom and how many people are actually surviving on the fact that there is a coal-based economy that's supporting and sustaining their livelihood? So there's a lot of that paradox in our system and in our markets that makes it very difficult to just apply a simple default rule of exclusion. But if we look at a little bit of the history, then you'll see some of the thinking also evolve. How responsible investing over time actually came about. It really started from this religious principle and this religious perspective in the 1920s, where the likes of tobacco and alcohol and all of those kinds of things were actually sort of banned and you were not supposed to invest in it, and people understood what that meant, and that was sort of the theme for social responsible investing at the time. And then, of course, as humankind evolved, we realized, well, that's not, the social aspect of it is very debatable and subjective. And as scientific advances came to the fore and people understood that investing is not just about a societal impact, but also about an ecological and an environmental impact, it really moved more to a world of talking about sustainable investing. And as you said rightly before, now everyone is talking about ESG, environmental, social and governance aspects. So there's a rich, I think, history behind it that also should inform us that this is not a bubble. This is likely not to be a bubble. I mean, this movement is coming about from consumerism, you know, the consumer asking to get more information, to get more transparency, to not just get financial gains, but also to know what's going to happen with these investments. Where is it applied? What's the impact thereof? It's coming about from the fact that millennials invest and think very differently about investment management. They don't just leave their money up to a traditional fund manager and they blindly trust him to do something with their money in a responsible way. They want to know. They've got social media, they've got apps, they've got news, they've got everything right at their fingertips.
And are very vocal about those outcomes, right? And holding
100%.
companies to account, because it really does tie into the concept and model around shared value. Sonja, it does sound like an interesting concept that we do need to start paying greater attention to. And you did allude to some examples that are very relevant to the South African environment regarding how to analyze and evaluate the investment perspective of certain companies, depending which hat you're wearing. But I'm keen to understand, if investors are going to pay greater attention to responsible investing, what are some of the principles that they need to look out for?
Well, I think it's important that we look for evidence. If I can quickly show you some of the evidence and bad experiences that we've seen. If you look at some of the evidence in the industry, there are people that like to, we talked about the greenwashing earlier.
Yes.
There are people that like to put up things, and these are two examples, and it's always easy to pick on someone that's offshore, right?
A lot easier. VW is missing in that picture.
True, we wanted to put VW in as well, but we all know someone like, or a company like British Petroleum, that in 2019 had this complaint about the fact that they were misleading the public in their advertisements, talking about their low carbon products and how environmentally savvy they were and how responsible they were. But if you look at their numbers, then actually 96% of its annual spend came from oil and gas. And a similar example, actually my favorite because I'm a coffee lover, is the Starbucks one, where they were bragging about their strawless lid that they brought into the market in 2018. But if you look at the details of it, that actually meant a lot more plastic in the system than the previous version of the lid and the straw that they had. So there's a lot of that sort of bad examples that I think the consumer and the investor out there needs to ask questions about. They need to be informed. They do need to ask for the detail. They do need to see transparency. I think there's a body of evidence that us as an industry subscribe to, and I know each provider will implement it differently. But there's certain codes and legislation that we need to uphold. From our perspective, the international body that is the strongest in terms of it is the United Nations Principles for Responsible Investing that started in 2006. We've been a signatory since then. And we were really part of this phenomenal growth of how the assets changed over time. If you look at it from this perspective, you can see that not only did the number of participants change over time that participated in this trend, but the number of assets that are investing according to the principles set out by the United Nations Principles for Responsible Investing has grown tremendously.
And maybe let's underscore that, because it actually tells us that the members of the investment community are actively participating then to make sure that they abide by some of these principles. Would that be correct?
100%. And to your point about what should people be on the lookout for, well, ask your provider whether they are part of this trend. What do they do in terms of it? The 6 principles, and those are things around transparency, disclosures, collaboration, how you incorporate ESG principles in your decision making. I think the investor has a responsibility and the right to ask, what are you doing about it? You as my service provider, I want to see it. Are you part of this trend? Do you make a difference? And where are your evidence points? I think just back to the rest of the evidence points, I think there's a whole body of research that has dispelled this old myth of responsible investing doesn't matter. You're really one of two proponents. You're either in the camp of, we don't really care, it's motherhood and apple pie, it's just the tree huggers and, let's put them on the side because we do serious investment management. We give great returns.
But the numbers add up according to what we see on the chart.
100%. The numbers make a difference. If you look at it, then the companies that tend to care about the society and the environment are also the ones that tend to perform better. So no longer can you make the argument to say that you only really worry about traditional investment management where financial returns and the risk and return is the major part of it. Because you can actually see from this chart that when you compare, and this was a study done by Morgan Stanley where they compared it 3,000 US ETFs, exchange traded funds and mutual funds. And that was last year. And you can see that for both of them, whether in the bond market or equity market, the funds that were run according to ESG and responsible investing principles considerably outperformed their traditional counterparts. So it's not only there for the feel-good and responsible reason. It's also there because of the merit of the financial implications it's got over time.
Exactly. Meeting shareholders' needs in terms of seeking and pursuing a return, but also making an overall impact on the broader societies as well as various stakeholder groups that these entities do tend to focus on. Sonja, thank you so much for that. We'll certainly come back to gain some more insight from you, but we want to expand and get fuller detail and understanding as to, again, the Momentum Investments approach here. And of course, this is where we continue to invite you to actively participate by sharing some of your questions. We've laid the foundation, but we've just touched the tip of the iceberg. So if you do have any further questions you'd like us to address, a gentle reminder to actively make use of the Q&A section of the tab available on our platform, and we'll be sure to address your question as we get into our Q&A segment following our discussion and presentation here today.